Good afternoon, everyone. Hope all is well. My name is Clark Hudgens, and I am from Nashville, Tennessee. We have an organization called Confirmation.com. It's an application that we launched in 2003 with the idea to automate the confirmation process, better validate the responders. And what you all are going to be engaged upon here, I think beginning next week, is a case study that we developed and we rolled out a little over a year ago that is designed to do a couple things. One, sort of simulate what the application looks like, kind of give you a first blush at Confirmation.com. But secondly, and as importantly, also gets you to look at confirmation responses with a little bit more of a forensic eye, as we call it, to look at the responses and identifying anomalies within those responses itself. Show of hands for those that are going into public accounting and especially going into auditing when they graduate. Anybody going into auditing in particular? Okay, about 2/3 of you, very good. And from what I understand from the previous class, and I'll ask the question to you, have you already done some internship work? Have you already done some work for the public accounting firms? Were they the larger firms? Were they E&Y, Deloitte, KPMG, those type firms, big firms or small firms, or mixture of both? Sort of a mixture of both, maybe. We are used, another reason why we developed this tool is, and I guess I'll stop and ask a question, has anybody used Confirmation.com already? If you did some audit staff work already. We've kind of become the default mechanism for audit confirmations for confirming cash and debt especially. This is our 11th year of the application since its launch. We are used by more than 12,000 accounting firms worldwide. Big Four on down are clients of ours. We have a mechanism that auditors quite honestly prefer to use when and where available. We do have a number of bank responders that are exclusive with us that will only respond to a cash confirmation through our mechanism. So as a result, we've grown pretty significantly. Again, we're serving all the major firms, and again, a lot of those SEC clients, those larger publicly traded organizations, when they're audited, our application is usually used. So this is to give you a head start on that. For those of you going to work for the smaller firms, they're certainly using this as well. And what you're going to be doing within the case study, today's presentation is not so much to give you the nuances of the case study. Professor Lewis will talk to you about that next week. There's a whole study guide. I'm not going to bore you with those details necessarily today. This is really just to give you an understanding of why you're going through the case study. To kind of demonstrate the purposes of which we created the case study, and to kind of give you a heads up of what to look for within the case study itself. But you'll be registering at this web address. This is edu.confirmation.com, so don't be confused. For those of you that have used it before, you won't just use the regular website, the www.confirmation.com. You'll go to the edu.confirmation.com. Will be one of the first things you'll do next week when you embark upon the case study itself. You'll go in to sign up new user registration from here, and then from there you're going to use your Rutgers email address to register, get yourself a username and password. That's what you use to access the website and go through the process itself. But again, really why I'm here today is to kind of help you understand, again, why you're going through the case study itself. Why did we launch Confirmation.com? A lot of it was to deal with and to try to address with what we saw was not just a business opportunity, but to help the plight of the auditor. Because prior to us coming into play in 2003, the process for confirmations was largely manual. It was very difficult to control and very difficult to track. It wasn't very timely. When you sent a confirmation request out, it was taking weeks, if not months, to get back, if it came back at all. Response rates were abysmal. The plight of the auditor, is depicted here by our cartoon character, really demonstrated the headaches that were associated with the confirmation process overall prior to us launching Confirmation.com, launching in 2003. And then I think the most important bullet there, the very last one, the fact that neither the CPA nor the responder were validated. There was really, very little information available to the recipient of the request itself when they sent a confirmation, when they had a confirmation received. Is it really coming from an auditor? Was it properly authorized? I mean, if they had the capacity to validate a signature, a lot of companies don't, a lot of banks don't even do it. But same thing on your end, when you get a confirmation response back, how do you know that that's really the right person who responds? How do you know that you sent it to the right address? Unless you went through into testing procedures, we all take Google and Yahoo for granted today in 2014, but not so easy to validate sources of information such as addresses back in 2001, 2002, and prior to that. So the fact that responders not being validated was a big challenge for the auditor. And these are the questions really that the auditor should be asking in every engagement. When you're looking at sending those confirmation responses out, when you're trying to verify cash and assets and verify sales and receivables and receipts, who's for validating the client information, where did the confirmation go, and who's performing the work, who's actually responding to that request. Because all this falls back into auditing standards. SAS 67 was really the first auditing standard that came about in 1991 that helped to start to define the confirmation process. Prior to this, there really was no standard per se that really challenged you or helped you as the auditor define what is an acceptable process for audit confirmations or what would constitute a valid response. They just left it up to you as your skepticism as a professional on, looking at the response itself and determining if it was valid, determining if not only did the data match, but perhaps it was a proper source. So SAS 67 that came out in 91 was really the first one to help to define it. And again, these are bullet points from that standard that the auditor must maintain control of the confirmation. Good example of that is it's really unacceptable for you just to allow the client, the audited client, to mail the request. A lot of accounting firms will have the client fill out the forms themselves and sign those documents or whatever, but it's always up to the auditor to control that mailing at the very least so that they fold the letters, stamp them, and mail them off if they're doing it the old-fashioned way. Second bullet point that they'll challenge you as an auditor to have, just what they kind of loosely define as direct communication with that responder. They don't really tell you how to communicate, whether that means, you send them something in the mail, you walk it down to the corner and hand it to them in person, but they challenge you to have direct communication with that responding party. They'll always encourage you to continue to always use your skepticism as a professional, to look at that information itself to ensure its validity and authenticity. And then I think, again, the most important bullet is number 4, to ensure the responder is knowledgeable and free from bias, to ensure that that individual who's responding is someone that is knowledgeable. Do they have access to the data? Is it someone who has access to the information system to help pull the information you need? But as important, if not more important, are they free from bias? Is the person that you're working with to provide that information, do they potentially have a relationship with a client? We'll look at some cases where fraud was committed and where confirmations were used to help perpetrate the crime. And what you'll find in a lot of these cases, that responder was not free from bias. That responder was someone that had a relationship with a client. It was their sales rep. It was the person they dealt with. It was someone that could have been, that had the potential to be manipulated to provide, again, you false information. So SAS 67 really defined that and challenged you as an auditor to make sure that that person was someone independent of the client relationship. Now, the last one here is sort of interesting. There are some of these where you'll see it's the Auditing Standards Board, the ASCPA, sort of reacting to the evolvement of technology. As technology continues to evolve, it's the audit standards trying to catch up. Not in every case, but this is one particular example of that, where this was an update to the standard that happened a couple of years later, where they updated it to include the ability for fax machines to be used to transmit client-sensitive data, like audit confirmations. May be hard for you all to really comprehend this, as we're talking about 22, 23 years ago, and some of you, if not a lot of you, may not even been born at that point. But using fax confirmations, back in those days, the fax machine was a miracle. I had one, and it was really incredible to be able to write something out and stick it in a machine, and instantaneously it received on the other end. It was revolutionary. So as auditors started to use the fax machine to transmit client-sensitive data, like audit confirmations, to be received on the other end, what the Audit Standards Board came in and challenged the auditor to do was, if you're going to use a fax machine, that's okay. You can document all that stuff, but you got to do 2 things. You've got to verify the source of the contents with a telephone call to the purported sender. So you've got to make a phone call to ensure that that person who sent you that fax was really the person who did it. And number two, request that that person sends you a mailed original to back up the fax copy. Anybody want to take a guess at why they asked you to do that? They're asking you here to send a mailed hard copy to back up the fax copy. Anybody want to take a stab at that? That's why they asked you to do that. Yes, sir. You can manipulate a fax. That's very true. There's no real wrong answer to this question, but it's not the real sole reason why they did it. Fax information can be manipulated, and we'll actually look at an example of that. But the reason why they added this in was in the early 1990s, most, if not all, fax machines back in those days were not what the fax machines are that we see today. They were not what they call plain paper fax machines. They used thermal paper. And an example of what you guys would know as thermal paper is, have you ever gotten a receipt from a gas pump? You know, when you put your credit card in, you get a receipt. You ever tried to look at that receipt 6 months later? What happens to it? It disappears. So as auditors were using the miracle of the fax machine in the early 1990s, they would go and make all their notes and tick marks and documentations. They would throw that fax copy in the audit file. They'd go back and look at it next year, and, oh my gosh, it's blank. You know, they used disappearing ink, you know, for fax confirmations back in those days. So again, the Audit Standards Board, as a way to catch up with technology of the day, they started asking or requiring the auditor to have a mailed original to back that up. And that was one of the reasons for that. Again, for validation purposes also, but also because, again, fax copies disappear over time, and they didn't really realize that when they allowed that to be happening. So those standards were in place for right at 12 years. In 2003, they were updated through a practice alert that they had issued at the time. This is the same year we launched our service, in confirmation.com. They sort of expanded the definitions. They continue to, require you to maintain control. The direct communication, they challenge you to have that through an active response. Don't just send negative confirmations. Don't have a passive response. In other words, don't send if you're going to confirm cash or receivable, which is something integral within the audit, you can't send it as a negative confirmation. We're showing the balances of X. Only respond if that's incorrect. That doesn't really qualify. They're discouraging alternative procedures. When we launched in January of 2003, we were shocked to find that there were a number of larger accounting firms that had completely abandoned the confirmation process overall. And the reason why they completely bailed out of even sending confirmations is, again, because of the plight of the auditor that you saw on the earlier slide. The response rates were abysmal. It took way too long to get back. Oftentimes when they got them back, they were wrong, and they had to go back and reconfirm them. There were firms that were completely abandoning the confirmation process as a result. There were consulting firms out there advising accounting firms to just bail out. But the Auditing Standards Board weighed in and said that, in order not to be dinged on your peer review, it's still a good idea, regardless of, the issues involved, to send confirmations and only document and go back and use alternatives testing procedures when in the absence of a valid response. So just using alternative procedures to start with really does not comply to auditing standards. And then number 4, using a client's online banking site. It's another example of the Auditing Standards Board's catching up with technology. What the accountant was doing at that time, and again, we all just take it as common knowledge here in 2014, we all have access to our online banking. But it was, again, sort of an emerging technology back 11, 12 years ago that primarily only commercial entities at that point was using. So the auditor saw that, wow, I could really step up the process here if I just log into my client's account and do a print screen and pull that stuff down. Well, Auditing Standards Board said using a client's online banking capability cannot qualify as an audit confirmation request. Easy way to remember that as you go through the case studies, you go through the rest of your education experience as you enter the workforce. If it ever comes to the question, if you're trying to decide as a document, as you look at a document, is it an audit confirmation response or is it just audit evidence? The easiest way to know that, the easiest way to determine that is, what is the source of the data? What's the source of the document? Is it a person? Is it a human being? Or is it a machine? If it's a person, under certain other circumstances, it can likely be determined or documented as an audit confirmation. If the source of the information is a machine, never can that be documented as an audit confirmation, and only certain circumstances can be documented as audit evidence. purpose for that is, and reason for that is audit confirmations can be challenged in a court of law. If you're going to document it as a confirmation, there's got to be somebody tied to that response. There's got to be somebody who attested to the data. They signed that form so that a prosecuting attorney can take and put them on the witness stand and ask them questions. So you can do that with a human being. You can't do that with a machine. So again, if that ever comes into if that question ever comes up for you and you're trying to determine is it an actual confirmation or is it just audit evidence, one of the ways to look at that is the actual source of the data. If that source is an actual person, again, they're under certain guidelines, it can be documented as a confirmation response. Okay, those standards really were in play for the better part of the 2000s, and then in 2010 there was another update that was handed out by the Auditing Standards Board and the international arm, the IAASB. There's some proposed updates in addition to this that we'll look at from a PCAOB standard. For those of you going to work with the Big Four, some of this may apply. And we're not done here. This is not going to be the be-all, end-all. This is no finish line. You will continue to see through your career there will be updates to the standards overall, obviously, but in particular to auditing, in particular to audit confirmations. They'll continue to refine that. They'll continue to challenge you as an auditor more and more for looking for, to looking at this data forensically, to look for fraud. They'll continue to have to, as technology evolves, the Auditing Standards Board is going to continue to have to keep up with new technologies as they evolve. And so this is what they came up with in 2010. So these are the standards really that we're played by now. Definition of an external confirmation is a direct written response to the auditor from the third party in paper form or through electronic or other medium. It's the first time they really acknowledged electronic delivery as an acceptable format to send confirmations. Before, it was just sort of a gray area, so they finally gave some definition to electronic or other medium, but only if that electronic medium meets certain guidelines. So to use electronic confirmations as audit evidence, you've got to identify the following risks: that the data may not necessarily be from a proper source, that the person who responded may not necessarily be authorized, and you have to question the integrity of the transmission. What this is doing is it's largely frowning upon using email as a mechanism to send audit confirmations. Client-sensitive data, using email to transmit that information is largely frowned upon by the Auditing Standards Board, and this is how they've kind of calculated or calibrated that definition. Reliability, also for electronic confirmations, you've got to use a system that validates a responder, and you've got to use a system that also uses encryption, digital signatures, and other procedures to ensure web authenticity, and relying upon an assurance process and a report like a SOC 3. You're not going to get a SOC 3 report on the World Wide Web. You're not going to get a SOC report and using email as again, primary mechanism to transmit that data. Looks like I wrote this standard. We didn't really write it. It's the Auditing Standards Board looking at applications like ours and sort of utilizing and using that information or whatever to help better define what's an acceptable process. Obviously, we do this. One of the things we do at confirmation.com is we have a SOC review done every 6 months. It's a SOC Level 1. The SOC Level 3 report you can pull down from our website. So we do all this stuff. We keep everything encrypted. It's part of the value we deliver is keeping all the client-sensitive data secure, keeping it all behind our firewalls. When you're just blasting out emails out there, it's virtually impossible to validate an email address. There's no way to do it. I'm sure you guys have received emails, as I have, from people claiming to be so-and-so at Bank of America. They're trying to fish and get account numbers and data from you. It's just one way in which the criminals can perhaps intercept that information. But from a validating standpoint, from an authenticity standpoint, just complying to SAS 67, there's virtually no way to know if you email a confirmation that person on the other end is really who you say they are. Okay? We talked about earlier logging into a client's online banking capability and how the ASB frowned upon using that as an audit confirmation. What they did here was they said, okay, it can never be documented as an audit confirmation, but under certain circumstances you could potentially document it as audit evidence. So what they said was, what they further defined that is, if you log onto your client's bank account you can do that, and you can print that off, and you can use that as audit evidence documentation, but only if the bank or the responding party gave you codes, gave you a username and password that was separate but equal to what your client uses to log in to that account. Some of that comes from the banking world. A lot of that comes from the commercial world for like mass retailers, Walmart, Home Depot, JCPenney, those kind of companies. If you're auditing, let's say, a manufacturer distributor, and they do business with JCPenney, to get paid, they don't send invoices through the mail to JCPenney, and JCPenney scratches a check and mails them a check 30 days later. There's a client portal that mass retailers like Penny's and Home Depot and Walmart use to pay their vendors. They'll sell them a certain amount of goods. They'll submit an invoice to them for payment, and all that happens electronically through this secure portal that they had. Well, again, auditors will look at that as an opportunity potentially to capture data, from Penny's or Walmart, let's say. Let's try to verify, let's confirm these invoices through this portal itself. Auditing Standards Board here is weighing in and saying, okay, you can't ever do that. You can't ever capture that information as an actual confirmation response because, again, the source is not a person. It's an actual machine. Excuse me. What they're saying here is that it can be documented as audit evidence, but only if you, the auditor, call Walmart and Walmart gives you a code that is separate from what your client uses to log into that portal and pull that information down. Unfortunately, Walmart is not in the business of transmitting and communicating directly with auditors like you to issue login IDs, to access clients' account information in particular. We don't know of really any organization out there that, from a responder standpoint, has really embraced this and has created a department or an application specific for accountants to be able to log in and pull this information out separately. So, again, it's there. It's a challenge for you. It's something that you'll have to continue to deal with. But just be aware, and some of this will come up on the case study, not this in particular, but stuff like this will come up on the case study. So from a case study perspective, be aware of it. But as you go through your career, don't be fooled by just being able to log into the client's portal and capture that information as data because the ASB's weighed in and said you can't really do that. They also weighed in on oral confirmation responses. It seems pretty self-explanatory, but you can't just pick up the phone and call somebody and say, hey, I show clients got $50,000 in this account. That doesn't qualify. It's got to be something that's documented. And then validating addresses. There's some proposed PCAOB updates here. This is the first one, and the next three we'll look at, where from a public company standpoint, if your client's an SEC registered entity itself, they're going to start requiring you to do a couple of things. One is validating addresses, validating the mailing address of the organization in which you're having the confirmation sent. Sounds like it should already be done, but you'd be surprised. Even the big firms are having the client simply fill out the forms themselves, take the forms at face value, stuff in the envelope, and firing them off. They never go and check to see, is 101 Main Street really an address for ABC Company or not? Is it a post office box they're sending to, which is frowned upon, again, in the eyes of the Auditing Standards Board. So what the ASB and the PCAOB are going to start doing is requiring you to have some sort of documentation, at least on a sampling of the confirmations that you sent. Did they really go to the right address? Is that really an address for that entity or not? Yes, sir. Well, P.O. boxes, not explicitly defined here, but P.O. boxes really don't meet the definition of a valid responder anyway, because again, like an email address, a post office box can be owned by anybody. I can go today and go down the street and open up a post office box and claim to be Bill Gates at Microsoft. Nobody at the post office is going to check that to make sure my name is really not William Gates and I'm not affiliated with that company. So companies will, banks in particular also, when you call them to say, ask the question, where am I supposed to, can you give me the address of where to send confirmations? A lot of times they'll say, we need to send it to Post Office Box 12345. It's really up to you. It's your job as an auditor to lean on that individual to push for a physical address. You've got to have confirmation sent to an address that can be verified. Post office boxes cannot be validated whatsoever. And one of the things we'll look at is fraudsters, from a fraudster standpoint, we have to look at some of this stuff from a criminal's point of view. They can get around that by going to organizations that offer post office boxes but mask the address as a physical address. So just because you see a physical address doesn't give you a level of security. But a post office box, if you see a confirmation addressed to a P.O. box, it should raise an immediate red flag, and you really have to press for a physical address. Not saying it doesn't happen. Even at the big firms, they'll still send confirmations to a P.O. box, but you're rolling the dice at that point, hoping that that's right. Okay? Couple of other items from a PCAOB standpoint is expanding the receivable requirement. So in addition to confirming cash accounts and things like that, from a SEC perspective, credit sales, loans, or other transactions will have to also be confirmed. And then requiring all cash accounts to be confirmed. That's something, again, that is a proposed update to the auditing standards from a PCAOB standpoint. If that happens, the ASB will probably weigh in and potentially make that a requirement for private organizations, so for private business, for government, nonprofit entities. They may do that as well. Some of this is a result of fraud cases. Health South is an example. Health South is a company based in Alabama, down where we're from. They were involved in a fraud back about 10 years ago or so, and one of the ways in which they overstated their value was they had a number of accounts. I think it was 35 or 40 accounts that they claimed to have, anywhere from $1 million to $2 million in those accounts, when in fact they had about $10,000 in each account, because they realized that the auditor was not confirming anything under $4 million. They weren't sending the confirmations. So the accounts were real. They didn't just fake the account numbers. They were there, but they were grossly overstated because they knew the auditors weren't checking them. So as a result of that, a couple of other things that have happened over the last 10 years, they're looking at requiring the auditor to confirm everything if it shows any sort of balance whatsoever. And then they weighed in on using internal auditors as sources of confirmations. Is just a bad idea there. Again, all this can go back to the SAS 67 standard here. These are people that have a potential relationship with the audited client, so just a bad idea to use internal auditors as a responder as well. What you'll see in the next slide is, I think there's a lot of misconception, a lot of false senses of security. If I'm an auditor and I don't work for one of the big four, or my audited client is not an SEC, not a publicly traded company, that I don't have to worry about fraud because it doesn't happen to companies like the ones I work for. But if you look at this slide, this is from a few years ago from the ACFE, that's the Association of Certified Fraud Examiners. Better than 2/3 of the frauds that they uncovered that were reported happened in the government, nonprofit, and private entity sector. Only 32% were actually publicly traded companies. We just don't hear about the other 2/3 because, again, the relationship with the audited client is such in a private nature, it doesn't have to be disclosed. It's not in the Wall Street Journal. Unless there's other litigation factors or whatever, it's not going to make the newspapers. Publicly traded companies are in the public domain. They're going to get reported in the Wall Street Journal. You're going to see it on CNBC and Fox Business News, et cetera. And so we know about those. And so sure enough, what I'm going to share with you today, I'm going to share some examples of fraud. They're all publicly traded companies, but don't be fooled. That's not just where it happens. It's just that's the ones that we know about. That's the ones we have data. We get calls, probably 6 to 8 calls a year on average, from accountants that are users of our service, just giving us a heads up or a thanks or acknowledgement or whatever, saying confirmation.com, help me catch this bad guy. We had a payroll clerk and they were pilfering money off into another account, and we caught it because there was no way for them to manipulate the process. Using confirmation.com is a way to do it. They won't give us the permission to use it in part of these examples, and they share with us very few details, but it's out there. It definitely happens. If you look at, and these are, again, publicly traded companies here, here's some examples of some companies and some frauds that happened over the last 10 years or so where confirmations were used to help perpetrate the crime itself. Some of these you'll recognize. The Kmart fraud, obviously Bernie Madoff's organization right down the road, Refco, Just for Feet. There's some in here that are more familiar than others. Going prior to 2001, here's some other organizations where fraud was perpetrated and the client used the confirmation process to help commit the crime. Some of these you may recognize. And it goes all the way back to the 1930s in McKesson & Robbins. McKesson & Robbins is an English organization, company based in London, England. They opened an office in Toronto, Canada. And that office in Toronto was staffed by 2 young ladies, and their job was to answer the telephone and forward all mail back to the home office in London. So what did they do? The officers of the company, claimed to create all these shell organizations that they claimed to do business with to inflate their revenues, to inflate their values, and they would have the confirmation sent to the bogus mailing address to their office in Toronto, Canada. And when those secretarial personnel would receive that information, would receive those confirmation letters, they just simply forwarded it back to the client. They opened them up, filled them out themselves, stuck them in the mail, sent them back to the auditor. Auditor never knew it touched the client's hands before they received it. That was the first documented case of it. All of these use a variation of that same theme. They're either having confirmations sent to totally bogus mailing addresses, or they're having confirmations sent to individuals through a medium that's insecure, and they're not validating the responders. And those responders are being incented by the client to provide false data. Let's look at a couple in particular. Parmalat was a fraud that happened about 10 years ago or so. And at the time, it was Europe's largest financial disaster. This is Europe's Enron, essentially. Parmalat is an Italian organization. They're in the food distribution business. They're the equivalent of Cisco here in the U.S. If you've seen the Cisco trucks moving up down the road, Parmalat's a big distributor here. You might know Parmalat from the Parmalat milk and the dairy section. You see a lot of that. What Parmalat did was it created a subsidiary called Bonale, which they funneled phony transactions, and as they uncovered, it was basically admitted before they closed their books at the end of 2003, but as they kind of began to unpeel the onion, it turned out to be an $18 billion, with a B, billion-dollar fraud, and close to a third of that, almost $5 billion in U.S. dollars, at least anyway, was in cash at 5 accounts at Bank of America that simply did not exist. So not the Health South deal where the accounts are real, the banks are real. These are totally bogus account numbers on accounts at B of A that supposedly existed that never really did. And the way in which, the way in which they did it was they had confirmation sent to a real address. The address turned out to be a group of attorneys that were actually based right here in New Jersey. I'm not sure if they were in Newark. I don't know where they were physically located, but they were in New Jersey, right outside of New York City. And what they would do is they would receive the mail, and then they would turn around and send a fax response to the organization. I don't believe the auditors were making follow-up phone calls as required by auditing standards, even from an IAASB perspective in Italy and their counterparts here in the U.S. But someone did point out that the fax number, this is a fax copy from the previous year, from the 2002 work papers that we got from the Wall Street Journal. But somebody did notice that it's kind of hard to see, but that the fax copy was actually a New Jersey area code and not a New York area code. Maybe that should have been a red flag. Maybe not so much to an auditor, based in Milan, Italy, but maybe to their counterparts that were helping them work on the audit here in the U.S. That didn't red flag it. So it all looks official. This is a, Bank of America logo. It says New York branch. Again, Bank of America they've not answered confirmations at a branch level, not purposely. There are still branches that, rogue branches that will answer confirmations. But Bank of America has had a central processing center for audit confirmations now for over 15 years. When this confirmation supposedly was sent, there's a central response center. They don't come from the branch. Not to say that they can't be. You can have a rogue branch kind of acting independently, but all confirmations for Bank of America were all processed out of South Carolina in an operations center right outside of Columbia, South Carolina. So maybe that should have been a red flag. Down here in the bottom left-hand corner is a signature. That all looks official. Agnes Belgrade, she really is a live person. She's a real person. She really is employed at Bank of America. But is this her signature? Absolutely not. They've absolved her of any responsibility as they went through the court system, the legal system, and they've determined that that's not her signature. So, again, if the auditor had just followed the simple audit standard that's been around for more than 20 years, if they just had direct communication with the third party, if they had followed up with a phone call directly and found Agnes Belgrade and asked her the question, are you the one signing these confirmation letters, she would have said, absolutely not. I have no idea what you're talking about. She's a real person, but she is not authorized to respond to audit confirmations, nor is, was this her signature? Was this the source of this information? So what happens is everybody sues everybody, including the auditors, including you individually. You've got certain responsibilities here. You can be sued in addition to the accounting firm that you're working for. Some of these amounts are pretty shocking. Millions and billions is what they sued for. Settlement amounts may be slightly less. But I think the most shocking thing here is Bank of America actually got sued for a few bill. And the reason why they got sued is not because they, created these fake bank names or fake accounts under their particular bank. Bank of America actually issued bonds on Bonnet and Parmalat in the previous year, and the value of those bonds based on the audited financial statement that claimed to have cash at their bank that simply didn't exist. So in other words, the bondholders never even bothered to check and look at the financial statement and check to see, wow, they've got $5 billion in cash. I wonder if we should make sure that that's still there. Maybe they've moved that to another account before we value these bonds. They never did that. And so as a result, shareholders lost 98% of the value of those bonds in the first day. They turned around and sued Bank of America for not doing their due diligence before issuing those bonds, as well they should have. But you take a few zeros off, and this is a fraud that could happen to anybody, anywhere. It's happened in plenty of cases where we don't know about it because it's not in the public domain. PFG Best is another one. This is a company, this is a broker-dealer that 2 years ago, summer of 2012, they, for a period of 20 years, this gentleman here, Russell Wasendorf, what he would do is he pilfered over $200 million over a 20-year period and took that accounts at U.S. Bank that supposedly contained $212 million that actually contained, or $218 million contained only $6. What Mr. Wasendorf would do is when the bank statements came in monthly, he would take those statements using Photoshop and change the real amount from $6 million and change to $218, is what it turned out to be when the fraud was finally discovered. But more importantly, or as importantly, he would also change the inside mailing address to a post office box, P.O. Box 708, Cedar Falls, Iowa, and there's a zip code. And that's the address that the auditor was sourcing to send the confirmations. Again, should have been a red flag that it was a post office box to start off with. Wasn't. They looked at the audit files. The auditor was doing the same auditor was auditing the organization for that same 20-year period. And all they were doing is looking at last year's audit file. They were simply going in and they would see that in the previous year, confirmations got responded to, and then the information all tied out, so they would just keep recycling that same confirmation process over and over again. There's also a part of SAS 99 that challenges you as an auditor to change the nature, timing, and extent of an audit engagement. A lot of that can be said for audit confirmations. Change the way in which you send confirmations. Don't just keep sending it to the same person, the same mailing address every single time. That auditor didn't take that, did not do that, and as a result, it was discovered using confirmation.com that those accounts were grossly overstated. How it happened was within the brokerage community, and especially within the futures trading community for the brokerage business, if you're trading in futures, you can also, you're regulated by and can be audited by a group called the National Futures Association, the NFA, company based in NFA based in Chicago. The NFA is a client of confirmation.com. The auditor that did this did not use our service. Again, they just mailed the confirms to a P.O. box. Well, the NFA came in behind the auditors, used our service to send the confirmation requests. Mr. Wasendorf initially refused. There's a process that you'll see as you go through the case study where the client will click on a link in an email. That's an electronic authorization. So once you get everything set up, once you get the client built and you get the accounts in there, you click on a button that sends the client an email. Clicking a link the client does, that gives you the authorization to send those confirmations out. When Mr. Wasendorf got that email, he freaked out. He initially refused to participate, to click on the link to authorize the electronic confirmations. They had spent 3 months or so convincing him that they weren't going to do it the old-fashioned way. They weren't going to send them through any other way than through our system to ensure the authenticity of it. They threatened to shut him down. And when he realized that there was no way he was going to be able to continue to get away with this, he finally relented. About this time 2 years ago, it was late July in 2012, on a Friday afternoon, He clicked on the link on the authorization email, allowing the auditors to send the request and processing the confirmations. He spent that weekend marrying his third wife in Las Vegas, Nevada. He signed over power of attorney to her and signed over all the assets to her, flew home late on a Sunday, Monday morning drove to work, took a garden hose, put it in his exhaust pipe, rolled up his windows, and tried to commit suicide. Either fortunately or unfortunately for him, he survived that. Somebody saw him doing this, called 911. He woke up 3 days later in jail, and this is his mugshot. And this is his suicide note, basically admitting to the whole thing. So we got some pub out of it. Our founder and President Brian Fox was on Fox Business News and gave an interview, and we got some write-up in the Wall Street Journal. So this was an example of, unfortunately, I guess for us, where bad news was sort of good news for us, because as a result of this, now we've got organizations like Merrill Lynch and Goldman Sachs. They're responders with us in our system for transparency purposes. You're going to send a confirmation through me. It's going to happen one of two ways. I'm either sending it electronically directly to the responder in what we call an in-network response. And so in that mechanism, I'm validating the person at that organization that they have the authority to respond to a request itself. They're not answering anything through the mail. They're basically getting notified by me by email that a confirmation is pending. They have their own username and password that they're using to log into the site itself, pull down your request, and submit a response. And so it all happens through our secure network electronically. You can use me to send a request through the mail in what we call our out-of-network mechanism, but the onus is on you to provide a valid mailing address for that confirmation response. We've got a mechanism built into our system that you can click on a button to ping that address, to test the address and its authenticity. I don't require you to do it. So I consider that and I document that as an out-of-network response, because at that point I'm not taking responsibility that organization exists, that's a right address for them, and the person that responds is authorized to do so. I'm just allowing you to use my mechanism to complement the in-network responders, which is the banks that we have online with us and the companies that respond in network. Good question. Again, thank you. Anybody else? All right. Moving on. So that's Mr. Wasendorf, and he's in jail now, and he'll probably be there for the rest of his life. Here are some examples of fraud that happened on the receivable side. So this isn't cash. Fraud typically happens two ways. They claim to have cash and assets that don't exist, or they claim to have sales that didn't happen. They're inflating sales to inflate stock prices. They're inflating, their revenue numbers, let's say. So these are examples where receivables were inflated, receipts were inflated, and these are AR confirmations sent to individuals within these organizations. So the fraudulent companies, the individuals that were committing fraud, were at Kmart, Just for Feet, and Ahold Food Service Company. The organizations listed below each are the organizations to which the confirmations were sent. These were organizations in which they sold, bought goods and services from, and so as they were being audited. So I don't list the actual people's names here, but if you look at the identifier in red, at the titles of the individuals that were helping to perpetrate the crime, helping filling out those false confirmations, do you see a common theme here? What's common to those titles that you see in there? It's sales, yeah. I mean, I'm not trying to discredit the sales profession here, but the common theme here is that these are all people that had a direct relationship with the audited client. Again, they weren't, as SAS 67 called for, knowledgeable and free from bias. They might have been knowledgeable, but they weren't free from bias. All these people were being incented by the client to provide you false information, and they did it typically one of two ways, carrot or stick method. Carrot, they dangled something in front of you. Here, do this, sign this false confirmation, and I'll buy more goods and services from you over the next, 12 months. Or do this, the stick method, or I'm going to take all my business away. There's plenty of examples of that. So they're not individuals. And unfortunately, they were individuals that the auditor didn't take the extra steps to validate and just follow those simple rules within within SAS 67, as it calls. A couple of examples: Eastman Kodak. The SEC filed suit against Mr. Darrell Lindquist. He was the vice president. He was dealing with Walmart. Darrell had just taken over the account. Kmart threatened to move all his business, their business to Fuji. And again, this is going back 12, 14 years ago when people actually used 35 millimeter film. And there was a big advantage to having all that stuff on the end of the checkout aisles, like magazines and gum and all that stuff. They threatened to move all that to Fuji if he didn't find a false $7 million confirmation, in which he did. Excuse me. Coca-Cola is kind of the example of the carrot methodology. Here, Kirkpatrick at Coca-Cola was enticed to provide false information and sign a false confirmation, and Kmart agreed to sell, additional amounts of Coca-Cola products over the next coming quarters as a result if he did that. So carrot and stick methods all happen. It's not just here in this country. Satyam is an Indian organization where they inflated revenues by more than $1 billion. These are the people that do customer support. When you call a company and enter a number and the person that answers the phone has an Indian accent, it may very well be this organization, or might have been before they went down. But they falsified more than 6,000 invoices and created bogus bank statements, and the auditors were either not confirming that or sending it to false mailing addresses. In China Century Dragon Media, you and I were talking a little bit about this or whatever. This is back in 2011. Their accounting firm basically bailed out of the audit because the officials at the company here would only allow the confirmations to be sent to certain individuals at the bank. So they said, we'll only sign the confirmation, but we want it to go to these people within the organization. We don't want it to go to anybody else. And Malone Bailey, fortunately, did not allow that to happen. They quickly found that the financial statement was over. The account was over. The accounts were heavily overstated, and they were quickly delisted from the stock exchange. There's ways in which we have to think like a criminal. I alluded to this earlier. This is an example of how a fraudster could potentially perpetrate the crime. And again, we just kind of have to get in the head of the criminal here in certain circumstances. This is, for example, we talked about post office boxes. Even though there's still lots of auditors out there sending confirmations to P.O. boxes, generally it's a bad idea. It's not been specifically prohibited by the Auditing Standards Board, but if you read the fine print and the auditing standards, it really does frown heavily upon sending confirmations to P.O. boxes. But there are a lot of fraudsters, or potential fraudsters, that could see that and recognize that and think that might raise a red flag if they use a post office box. So a potential way around that is opening up a post office box at the UPS store. Does anybody done that before? Have you ever opened up to receive mail we used to be mailbox, et cetera, now it's a UPS store? What they give you is an actual physical address. So instead of having a post office box at the post office, P.O. Box 12345, you've got what looks like a physical mail address, and they advertise that. If you can see in the fine print here, it actually talks about you can have a business, and to make it look more real, instead of it being post office box, ABC Company, post office box 12345, you can have it as 330 Franklin Road, Suite 135A, and it looks like you're a real live organization, when in fact that's just the box number at that particular mailboxes, et cetera. So again, fraudster could potentially open up a post office box here, have confirmation sent to that address. Didn't raise a red flag with you because it's a physical address, not a P.O. box. You didn't bother validating it, though, and client has the ability to intercept that letter and answer his own confirmation. Yes, sir. Well, through our application, we validate the individuals as authorized to respond. So from a bank perspective, let's say, there's a department that's challenged with authorized or authorized to respond to audit confirmation requests. We don't allow the client to manipulate you, the auditor, to say, I want confirmations to go to this address or to this particular person, like in the case of Kmart and Just for Feet and Ahold. Client can't manipulate to whom the confirmation is sent when it goes, what we again call in-network through confirmation.com. We determine who that confirmation is sent to and ultimately who responds. Doesn't mean that they can't still be identified potentially by a client and incented to provide false information. Just a lot harder for that client to get to that person in Bank of America that's located in, Columbia, South Carolina, rather than they're a banker here in Newark, New Jersey. It just creates a degree of separation from the client and that potential client relationship. Not completely foolproof, but through our system, we not only ensure that it gets delivered to the person who's authorized to do so, but if it ever comes into question, through our system, we would know exactly who responded, the date and time at which they did it, and the information they provided. And on AR confirmations, we've got a module that allows auditors to send receivable confirmations through our network, and we call those in-network responses. What we've done there is, for AR confirmations, we've identified the individuals, and they're affiliated either in accounting or accounts payable, and they have the ability, we've gotten independent validation from either their supervisor or superior that they respond to audit confirmations and they're authorized to respond. There's no way for me to insulate that individual completely from being approached by a potential client if they're able to determine who that is and disallow them from being incented to provide you false information. What I'm doing is, more than anything else, taking those validation steps to ensure it's not going to a false mailing address and it's not going to someone who has a potential relationship with a client, like their sales rep or whatever. I don't guarantee the data itself is being transmitted. Again, there's no way that I would have the ability to do that, to guarantee the actual data itself is being transmitted. I'm guaranteeing the transmission is encrypted so the bad guys can't hack it and get into it as best as absolutely possible. And that the person who registered as a responder on the other end, whether it's a bank or company or whatever it is, we've gotten verification that they really are employed there. The company's real. I capture the business address of the organization. That's one. But that the person is actually employed at that organization, and that we get acknowledgement from someone else besides themselves at that organization, like a CFO or an AP manager if they're a supervisor, let's say, that they are authorized, their title, that they are authorized to respond to the request. Yes, sir. Anybody else? Okay. Continuing on the whole think like a criminal theme. This seems a little far-fetched, but stay with me on this because this has happened and it's very easy to do. One of the things we looked at earlier in the auditing standards was the IAASB weighing in on you as an auditor logging into a client portal like their banking system or an AP portal and getting paid. Not really in the mind of the Auditing Standards Board for this particular example per se, but this is kind of what was going through their mind as they updated that auditing standard, because what we did here was, for less than $200, we went to register.com and we built what looks like a very real website that to you, the unsuspecting staff auditor, might think is a client portal. And we did it, and again, for $168.40 by doing the following. We went to register.com. We registered the web address, fakecompaniewebsite.com. Doesn't get any more blatant than that. Put in your mind's eye that instead of fakecompaniewebsite.com, it's bank-america.com or wall-mart with an S on the end and you didn't know it was there.com, or something as a very similar web address to an organization or a bank to which you would be, client was trying to tell you that you could go into that web portal and pull audit information out of. But what we did here, to make it so blatant example, we actually registered the fakecompaniewebsite.com website address to the AICPA. We registered it to a guy named Chuck Landis. He's actually an employee of the AICPA organization. And we used that 330 Franklin Road, Suite 135A, that I got from mailboxes, et cetera, as my physical mailing address. So if I get anything mailed by the auditor, I can answer that as well. I even went in and got myself a telephone number, an 800 number, so if the auditor calls me, I could say, yes, fakecompaniewebsite.com, or actually AICPA.com. That's what we're using to shell the company up. If you run a test on it, you would see the reports would show you on whois.net that if you ran fakecompaniewebsite.com, it doesn't show it as Brian Fox at Capital Confirmation. It shows that Chuck Landis at the ICPA is the owner of that website. So you can't just run a simple whois and see who that website belongs to, because it can be duped as well. We paid an extra $11 to hide the actual ownership of that organization itself. So the way in which we built the website is also quite simple. There is not, it doesn't require me to spend days and days. It wouldn't require your client, the audited client, the potential fraudster, to spend their own time going through and building this bogus website to make this thing look real. The way in which you do that is, and for those of you that are technically inclined, you'll know this, you can go to any open web address that's not S encrypted, and you can go to the View tab within Internet Explorer, click on the source code, and simply copy the source code for that home page, go back into Web Builder, open up Web Builder, and simply paste the source code into your Web Builder. And all of a sudden, fakecompany-website.com, if you can see in the URL web address at the top left-hand corner, looks just like the AICPA's homepage. So again, put your mind's eye on and change the name of the website and change this to Walmart or Home Depot or Bank of America or U.S. Bank. This looks very real. It's not chintzy. I didn't have to spend days and days trying to build this thing from scratch. It took me all of about 60 seconds to find a source code of a website that I could copy and paste it in here. And then down here in the bottom left-hand corner, I paid a high school kid a couple $100 to go in and build an auditor login. So you type in any code there, and second screen pops up, and there's bank statements or receipts of invoices that look very real, that are going to match phony invoices or fake bank statements that you're looking at as an auditor. So it's technology. It's the criminals using technology to perpetrate the crime. It's the Auditing Standards Board acting as the police force here, trying to keep up with technology as technology continues to evolve. Email, this is an extension of that web address. We can have our own email address. You know, as you guys know, I'm sure you've seen lots of phishing emails in the past. Email addresses, it's virtually impossible to validate an email address. There's no way to know that Joe Smith at abccompany.com is really Joe's email address, or it's a masked email address and going to somewhere else. It's just virtually impossible to do it. You know, Auditing Standards Board weighed in at one time and said you can use email to send confirmations as long as you pick up the telephone and call them and follow up that audit information, that confirmation information, and they can say on the outside. Again, if I'm going to go through the trouble and spend a couple $100 to create a phony-looking website, I'm going to do the same thing with email. And again, for $11 or $12 a month, I think is what it is now, you can get an 800 number, even a toll number, and you can have that number listed in whatever organization you want. And through my email, I can list that number that you would call, and I would answer in whatever company I needed it to. So that's not giving you levels of surety either. So if you use an electronic medium, again, you have to be aware. You have to ask these questions. It's impended upon you from the Auditing Standards Board perspective and from a best practices standpoint that there are mediums out there that give you some alternatives outside the post office. There's electronic mediums like ours. But if you use an electronic medium, you have to ensure that it's secure, that's legitimate, and that the individuals that are responding are authorized to reply. Otherwise, you stand the chance of getting caught up in a fraud case, unfortunately, like those in the past. Okay, case study materials. What you're gonna see next week as you go through this with your professor is there'll be a guide, and that guide is very self-explanatory. I encourage you to read it once all the way through and then lean on it as you go through the case study. Case study's been out for more than a year now. We've had 3 different semesters go through the case study itself. I don't think you'll find anything out there, that we've not seen before. But again, if you come across something or if you get stuck with something that can't be answered by the guide or by your professor, we do have customer support. You've got the ability to email us, customer.support@confirmation.com, and get that question answered. But what you'll find, what you're a staff auditor at the accounting firm Putnam & Jacobs. You are auditing, the client's name is Simply Soups Incorporated, and you're confirming cash balances as of 12/31/2013. Now, what you'll find as part of the materials there in the case study as you go through it is a trial balance. So you'll have the balances already listed out for you in the accounts that you'll be confirming. You've got a cash lead sheet that shows you the variances in those cash balances over certain periods. end of third quarter and end of year 2013, and the changes in those balances, and you'll want to note those as such. And then you'll have the reconciliation summary. That's all been ticked out for you by a person at the firm, and has been created. And then you'll have the listing of the accounts that are to be confirmed, and what your objective is, what your mission is to go through and send those confirmations using the tool and documenting that on your work paper and confirm balances as of 12/31. So just keep in mind, you're not just ticking and tying these balances. You're not trying to just make the amounts match. Obviously, that's important, and if they don't match up, you need to identify those as a not a match and go through the reconfirmation process. But you're also looking for anomalies. I think for extra credit in here, there's confirmations that go through the out-of-network mechanism that you can have the option to send if you go through that. But you're looking for anomalies in the responses. Did the same person to whom you sent the confirmation that you identified as a responder, are they the ones who responded, for example? Look for anomalies in the responses themselves and not just at the numbers and whether they tie out. And that's how you'll be graded, is looking for those differences. So you'll be either agreeing and disagreeing with the cash listings, making those agree with the reconciliation statement. And then, again, do you feel as a professional is the confirmation itself pervasive audit evidence? Is that something that you feel comfortable with handing to your supervisor, to the partner, to tie out the audit if this was real world? And then the deliverables that you'll have is the testing work paper with all the components of that work paper itself. There's a confirmation log, so as those confirmations are sent and ultimately received, we're documenting that time frame in which that confirmation came back. And then the actual confirmation itself, obviously you're going to make that as part of the audit file in addition to the tick marks that you made on the work paper itself. And then there's an audit procedure checklist that you'll go through. So we're showing every time you log in to do a certain step, there's really no way to fast forward into the last step. You've got to go in and do all the steps, 1 through 7, all the steps that are involved in the audit procedure itself. But again, that today was really not so much to give you the details behind but behind the case study itself. You'll have plenty of time to look at that next week, and again, should all be answered and self-explanatory from the case study materials. But I'm here to answer any questions if you have any about the material that we covered or about the case study. Anybody? This is real world, so this isn't case study we're talking about. We're now up to about 500 bank responders, which is up significantly from January 1. We actually just kind of bolstered our staff. We now have, 3 people that are strictly challenged with adding new bank partners, bank responders. And so we've added a ton of the smaller banks that were out there that maybe weren't on when you did your internship. We always encourage auditors to, recheck the list and see if they're in network with us. Company standpoint, we've got a couple of thousand companies that are responding in network with us now. A couple of thousand is still scratching the surface from the breadth of companies that answer confirmations that are out there. I've got some really big ones. I've got some retailers, utilities. It's a whole cross-section of different industries. But certainly 2,000 is not comprehensive. From an AR standpoint, it'll always be a hybrid between what I can send in network electronic and what you can use me to send them either electronic out of network or through the mail. The idea, though, within either medium, however they're delivered, is to try to get the confirmation out of the hands of the client, get the control back in your hands and the auditor's hands where it belongs. Whether you're using me or not, you're the one actually dictating and determining and validating that the person is authorized to respond, that the address is real. I can help you do that, and you can outsource that mailing to me. For a small fee, of course, I'll charge, for mailing the request and giving you the ability to validate the address. But either way, the real objective is to create a total confirmation solution where you're not just thinking of me as bank confirmations, you're using me for all this other stuff. But again, most importantly, put the control back in your hands.